I'm always looking to add high quality companies to my portfolio, and I track a lot of them. Today, we're going to go through one of those companies, one that I've recently bought because, in my opinion, it has one of the strongest business models in the entire world. What if I told you that technology giants like Apple, Nvidia, and Samsung are all completely reliant on a single company? That one company's technology is so critical, it literally underpins the entire digital world that we live in. That company is ASML, and for me, buying this stock wasn't just another trade, it's a real investment in the one company that I believe holds the keys to the future of technology. From your smartphone to the AI that is completely reshaping the world. So today, I'm going to show you exactly why I invested my own money into ASML and why I see it as a core holding for long-term growth. Alright, so to really understand the investment case for ASML, you first have to understand a massive problem facing the entire tech industry. We all demand that our technology gets better, faster, and smarter. For decades, that progress came from Moore's law, which states the number of transistors we can fit on a chip doubles every 2 years. But we're hitting a literal physical wall. The transistors we're making are now so unbelievably small, we're talking single-digit nanometers, that they're approaching the size of atoms. To keep innovating, to power the next wave of AI and autonomous driving, the industry had to find a way to print impossibly small patterns onto silicon. The problem was, the existing tools were running out of gas. The light waves used in traditional chip manufacturing were simply too thick to draw the incredibly fine lines needed for the next generation of chips. The entire engine of technological progress was on the verge of grinding to a halt. And this is exactly where ASML's story begins. This is where ASML, a Dutch company most people have never heard of, enters the story. They didn't just iterate on the old technology, they solved a problem nobody else could by creating something entirely new, extreme ultraviolet lithography, or EUV. If the old method of making chips was like trying to draw a detailed portrait with a thick Sharpie, ASML invented a pen with a tip that is atomically precise. EUV technology uses light with a wavelength of just 13.5 nanometers. This light is so incredibly fine that it's absorbed by almost everything, including air itself. To make this work, ASML had to build one of the most complicated machines in human history. Each machine is the size of a double-decker bus, weighs 180 tons, and inside it, a powerful laser blasts a tiny drop of molten tin 50,000 times per second. This creates a plasma that emits the exact EUV light they need. That light is then guided by the most flawless mirrors ever created to etch patterns onto a silicone wafer, all happening inside a perfect vacuum. The result is a machine that creates chips with features smaller than a virus. It is an absolute marvel of engineering that took decades of work and billions of dollars to develop. And here is the most important part for me as an investor. ASML is the only company in the world that makes these machines. Competitors like Nikon and Canon tried and failed to solve the physics. This gives ASML a 100% monopoly on the single most critical piece of technology in the entire semiconductor industry. Every advanced chip from TSMC, Samsung, and Intel, the very chips that power Nvidia's AI GPUs and Apple's iPhones, is made using an ASML EUV machine. When I look for a quality company, the first thing I analyze is its competitive advantage or its moat. ASML's moat is one of the widest I've ever seen, and it's protected by 3 barriers that are almost impossible for any competitor to overcome. First is the sheer technological complexity. A single EUV machine has hundreds of thousands of components sourced from a global network of suppliers, and it requires 3 Boeing 747s just to ship one. The physics are so difficult that just assembling it is a monumental task. There's even a story that a competitor tried to reverse engineer an older, much simpler ASML device. They successfully took it apart, but they couldn't put it back together and had to call ASML for help. If a competitor can't even copy the last generation of technology, the odds of them building a new EUV machine from scratch are basically zero. Second is their head start in time and data. ASML started working on EUV back in the 1990s. They've accumulated decades of patents, proprietary research, and most importantly, data from the hundreds of machines they have operating around the world. They use this data to constantly upgrade the machines through software. So you're not just buying a machine, you're buying into a manufacturing platform that continuously improves over time. And third is the capital investment. A single new generation of high-NA EUV machines costs nearly $400 million. The research and development to get to this point was so expensive that ASML's biggest customers, Intel, Samsung, and TSMC, actually invested billions of dollars directly into ASML, just to ensure that the technology would exist. What new company could possibly convince customers to fund a competitor when ASML is already light years ahead? This combination of technology, time, and capital creates what I believe is one of the strongest monopolies in the world today. Now, ASML's total dominance isn't just a business story. It has huge geopolitical implications. The world has woken up to the fact that whoever controls advanced semiconductors has a massive strategic advantage. And because ASML is the sole gatekeeper for manufacturing these chips, it is now a central piece in the growing tech rivalry between the United States and China. The US government has blocked ASML from selling its most advanced EUV machines to China in an effort to slow down Beijing's technological ambitions. Now, while this does limit ASML's total addressable market, it also underscores just how irreplaceable this company is. China can pour billions of dollars into its own domestic chip industry, but as long as they don't have ASML machines, they will almost certainly remain a generation or two behind. This geopolitical tension is a double-edged sword. It does create risks, like potential supply chain issues from export controls. However, the way I see it, it also solidifies ASML's importance to the West, making it a strategic asset that governments have a vested interest in protecting. Alright, so now that we've covered the business and its incredible moat, let's get into the financials and my investment thesis. But first, if you're getting value from this type of deep dive analysis, go ahead and subscribe to the channel so you don't miss any of my future videos. So why did I put my own money into ASML stock? It really comes down to this. I'm investing in the one company that is absolutely indispensable to the world's most powerful trends: artificial intelligence, high performance computing, and the digitization of everything. Let's look at the numbers. ASML is a financial machine. For Q3 2025, the company posted revenues of 7.5 billion euros with a gross margin of over 51%. With a market capitalization of over $400 billion, it is one of the most valuable companies in Europe. Analysts are forecasting strong earnings growth to continue, with full year 2025 sales projected to be up around 15% from 2024. The company also has a very clear growth path laid out, with a target of hitting between 44 billion and 60 billion euros in revenue by 2030. This growth will come from two main drivers. First, the expanding use of EUV technology into more types of chips. And second, the rollout of their next generation machines called high-NA EUV, which are even more complex and come with a price tag of nearly $400 million each. On top of all that, ASML has a fantastic razor and razor blade business model. They sell the machines, the razors, but they also generate a steady, high margin, recurring revenue stream from what they call installed based management. This is their services, software, and upgrades business. This provides a stable and predictable income that helps smooth out the cyclicality of equipment sales, and that is a hallmark of a high quality business. Of course, no investment is risk-free, and you have to look at the other side of the coin. For ASML, I see the main risks as geopolitical, technological, and the cyclical nature of the industry. The geopolitical risk is obvious. If the US-China trade war escalates, it could lead to more disruptions. While ASML has guided that they expect demand from China to fall significantly in 2026, they also believe that growth from AI and other global markets will be more than enough to offset it. In my view, while the tensions make for scary headlines, ASML's critical role for the US and its allies make it more of a protected strategic asset. The technological risk is that a new competitor emerges, or that ASML stumbles with its new high-NA machines. However, given their multi-decade lead and the incredible complexity of what they do, I think the risk of a true competitor emerging in the next 10 years is extremely low. Finally, the semiconductor industry has historically been very cyclical, but the key secular trends driving ASML, like AI and the explosion of data, are not short-term cycles. These are long-term structural changes. Companies like Nvidia, Amazon, and Microsoft must have more powerful chips to achieve their AI ambitions. They simply cannot afford to fall behind. This, in my opinion, makes the demand for ASML's machines far more structural and less cyclical than in the past. In the end, my decision to buy ASML stock comes down to a simple thesis. Our world will continue to demand more and more powerful technology. ASML isn't just a company benefiting from this trend, it is the primary enabler of it. It is a true monopoly hiding in plain sight. It's incredibly rare to find a company with a moat this strong, a growth path this clear, and a product this fundamental to the future of the world. That's why I bought ASML stock, and that's why it's now a cornerstone holding in my portfolio. What are your thoughts on ASML? Do you agree that it's the ultimate monopoly, or do you think the risks are just too high? Let me know your thoughts down in the comments below. And if you enjoyed this breakdown, make sure to like this video and subscribe for more deep dives into companies that are building the future. Thanks for watching.